Think you need a big salary to start investing? Think again. College is actually one of the best times to begin building wealth, even if you're working with just a few dollars. In this video, we'll break down simple investing strategies you can start in college that are low risk, beginner-friendly, and proven to pay off over time. From index funds to micro-investing apps and setting smart financial habits early, you'll learn how to lay a solid foundation now so future you can thank you later. Today we will talk about simple investing strategies you can start in college. So before we get started, make sure to hit that like button, also subscribe to my channel. Most people think you need to be rich to invest, but here's something that might surprise you. Many millionaires didn't wait until they had high-paying jobs. They started small, often in college, and built wealth over time. That's because the earlier you start investing, the more time your money has to grow. You don't need thousands of dollars. In fact, you can begin with just a few bucks a week. 10. Open a high-yield savings account. Before jumping into stocks or apps, you need a solid base. The first step is to open a high-yield savings account. Unlike a regular savings account that pays almost no interest, high-yield accounts pay you much more, sometimes 10 to 15 times higher. This is where you can park your emergency fund, money you might need fast, like if your laptop breaks, or you have an unexpected expense. It's safe, there's no risk, and you can access your money anytime. Think of it as your financial safety net, and having that net makes it easier to take small investing risks without fear. 9. Try micro-investing apps. If you've ever said, "I don't have enough money to invest," this one is for you. Micro-investing apps like Acorns, Stash, or SoFi let you start investing with just your spare change. For example, if you buy a coffee for $3.40, the app rounds it up to $4 and invests the extra 60 cents. It's completely automatic. You don't have to think about it. Over time, those small amounts add up. Without noticing it, you'll be investing every day. It's the easiest way to start if you're not sure where to begin, or if you don't have much cash to spare. 8. Buy fractional shares. Have you ever looked at stock prices for companies like Google, Amazon, or Apple and thought, "I can't afford that"? You're not alone. But thanks to fractional shares, you can now invest in big companies with just a few dollars. This means you can buy a small slice of a $3,000 stock for as little as $5. You still get the same benefits as owning a full share, just in smaller amounts. Apps like Robinhood, Fidelity, and Charles Schwab let you do this easily. It's a great way to build a diverse portfolio without needing a lot of money up front. 7. Understand and invest in ETFs. ETFs, short for exchange-traded funds, are a smart choice for beginners. Instead of buying one single company's stock, an ETF lets you invest in many companies at once. Think of it like a basket that holds pieces of 500 different companies. So if one goes down, the others can keep your money growing. One of the most popular ETFs is the S&P 500 ETF, which includes the 500 biggest companies in the US. Over time, it has shown strong growth. You don't need to guess which stock will do well. The ETF already spreads your risk for you, and you can buy in with as little as $10. 6. Automate your investments. The most powerful tool in investing isn't money, it's consistency. That's why setting up automatic transfers to your investment account is so important. Whether it's $5, $10, or $20 a week, when it happens automatically, you stay consistent without trying. This habit builds discipline, and it helps you avoid the common mistake of spending first and saving later. If you automate your investments right after you get paid, you'll never miss the money, but your future self will thank you for it. 5. Save with student discounts, then invest the rest. College students get tons of discounts: food, tech, software, clothes, travel. Use them. Every dollar you save on something like Spotify or Amazon Prime is a dollar you can invest. Let's say you get a 50% student discount on a $10 subscription. That's $5 saved. Now invest that $5 instead of spending it elsewhere. Do this every time you save money. It's a smart way to take advantage of your student status to build future wealth. 4. Avoid credit card debt. Here's the harsh truth: debt kills wealth. especially credit card debt. Many students fall into the trap of spending more than they have, thinking they'll pay it off later. But interest rates on credit cards are brutal, often 20% or more. That means if you buy something for $100 and don't pay it off quickly, you can end up paying $120 or more. That's money that could have been growing in an investment account. If you already have debt, focus on paying it off first. Keep your spending below your means and avoid using credit cards for things you don't absolutely need. 3. Open a Roth IRA while you're still young. If you're earning any money, even from a part-time job, you can open a Roth IRA. It's one of the best retirement accounts out there. You put in money you've already paid taxes on, and when you retire, you can take it out tax-free. What makes this powerful is compound growth. The earlier you start, the more time your money has to grow. For example, if you invest $1,000 at age 20, it could grow to over $10,000 or more by retirement, even if you don't add more. The growth is completely tax-free. It's one of the smartest financial moves you can make while still in college. 2. Learn as much as you can. Knowledge is your best investment. You don't have to become a financial expert, but take time to learn the basics. Understand what stocks are, how the stock market works, and the difference between short-term trading and long-term investing. Read books, follow reliable finance channels, or listen to podcasts. Don't fall for flashy ads promising quick money or crypto schemes with no real value. The more you learn, the more confident you'll feel. And confident investors make smarter choices. 1. Just start, even if it's $5. This is the most important point. Just start. Don't wait until you have a full-time job or a big salary. Start with what you have right now. Even if it's just $5 a week, do it. That small step builds the habit, and the habit is what leads to real results. Here's something to think about. If you invest just $20 a month starting at age 20, by the time you retire, you could have over $50,000. And that's just from skipping a few takeouts a month. If you wait until 30 to start, you'd only have half that amount. Time is your most powerful tool. Use it now. Investing in college isn't about becoming rich overnight. It's about starting smart habits early. The sooner you begin, the more money you can build with less effort later. Every strategy in this video is simple, practical, and something you can start today. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.